So this wasn't announced in the budget last Thursday. It wasn't verbalized by Jeremy Hunt, but I've just looked through the policy document and it is true. I want to thank the commenter who actually highlighted this to me in my analysis from the budget last Thursday, but there is going to be a mortgage bailout in 2023. Now, I'm going to go through the document here. I'm going to link it down below in the comments so that you can actually go find it yourself. But you can also Google this as well. You just need to go to gov.uk, type in Autumn Statement 2022. It's on page 49. It's in paragraph 5.16. And before we get into what this clause basically says, I'm going to repeat something that I said on Sunday morning on my live on Instagram. We need to read the writing on the wall. The writing is on the wall. The next year or so is going to be extremely painful. And the reason why it is going to get extremely painful is because of interest rates. Now, in the opening remarks that Jeremy Hunt gave last Thursday, if you watch the budget, he said he has given his full support to the Bank of England to do what is necessary to bring down inflation. And we knew from probably about a month and a half ago, Andrew Bailey said pretty much that he doesn't feel that the Bank of England has done enough to combat inflation, and they will do more in order to bring inflation back down to the 2% target. That, in conjunction with the comment by Jeremy Hunt last Thursday, means that interest rates are going to continue to rise. Now, what that means for the property market is we are going to see mortgages increase in cost dramatically, and that potentially leads to a housing crisis where property prices start to fall. Some people are saying double digits, some people are saying 35%. The reason why this clause is in the budget but was not, I guess, announced officially is because the government secretly knows that things are going to get bad. And if we're going to read the writing on the wall, we need to be aware of this so that we can prepare ourselves for what is coming. Now, let's have a look at the clause. The clause says reforming support for mortgage interest. To support mortgage borrowers with rising interest rates, the government will allow those on universal credit to apply for a loan to help with interest payments after 3 months instead of 9. The government will abolish the zero earnings rule to allow claimants to continue receiving support while in work and on universal credit. This will come into effect in spring of 2023. This is an official document. This is not made up. This is for real. Now, we don't know really how this is actually going to work in practice. But essentially, what this means is if you fall into financial difficulty, not able to pay your mortgage when interest rates start to increase and start to go up, remember, we're already forecasting that there are going to be difficulties next year because 2 million fixed rate mortgages are going to come off their fixed rates next year, starting in spring next year. So if you are one of those people where you come off your fixed rate and your mortgage repayments have jumped 4, 5, 600 pounds and you cannot afford it, if you're receiving universal credit, you'll be able to apply to the government for a loan to help with your interest payments. Now, how I think this will work is you'll take out a loan, they will give you a loan against the value of your property. And that could be a good thing, but also it can also be bad because essentially, if your property falls in value, you're taking a loan against the decreased value in your property. It's money you're going to have to pay back in some way, shape, or form in the future. And they will probably take a proportion of your future house growth as a repayment, as interest for this loan. A lot of stuff is very, very unclear right now. And again, like I said, this was tucked away in page 49. This was not announced. We don't know how this is going to work in practice. I am sure that they'll be working with the banks to say, look, we will underwrite this loan. Please assist people as they are. But again, the writing on the wall is they know how bad things are going to get. They are expecting, judging by this kind of, I guess, piece of legislation, is they're expecting a tsunami of defaults and repayments. What this means for the property market is this is maybe a little bit of a safety net, something that may prevent property prices falling as far as some people are predicting. This will give some kind of cushion. But nevertheless, we have to be prepared for what is actually coming. And I've said this before, and I'm going to say it again. Now is the time to take personal responsibility and to be proactive. People were saying that the interest rates won't rise this far. It will. After seeing this, I'm absolutely convinced we're going to start to see aggressive interest rate rises from the Bank of England as they see fit, with this kind of mechanism in place to protect people. Now, obviously, these are people who are on universal credit, right? So, what happens? What support can they give to people who are not on universal credit? That is a question that still needs to be answered, and something that I'm guessing we're not going to find out about until we get to the point where those 2 million fixed rate mortgages start to run off their fixed rates and people start to reapply for mortgages on higher offerings because the bank rate has moved that much. Remember, the last bank rate increase that we saw was 0.75%. It was the highest we had seen in decades. In decades. I think we're going to see more of the same coming. I would not be surprised if at some point we start to see increases to the bank rate of 1%, maybe even more. And that's a scary thought. I I don't even I couldn't even fathom what that would be like. It will be monumental. The states have already done this, and oftentimes we follow suit with the states, and we follow their lead on what they've done. And the consensus in central banks has been we will continue with interest rates and pushing monetary policy until we feel that we are going to break something in an effort to bring down inflation. This is not a softly approach that they're trying to take. The Bank of England has been, I guess, accused of being slack, of not doing enough quick enough. Well, be careful what you wish for, because it looks as though we are going to see a lot more interest rates, and aggressively so, in the coming months. And with this kind of piece of information legislation put in the autumn statement, in preparation for what is going to be coming along in the spring of 2023, when these mortgages start to roll off, should be a wake up call to everybody. We are in for a very, very, very tough ride. And the age of low interest rates is completely over. And if you're in the property market right now, guess what the government has also done to ensure that the tax take is as big as possible? They've halved capital gains tax, dividends, the capital gains allowance, and the dividends allowance as well. So if you are a landlord looking to sell property, you best get that done now, because the point at which you're going to start paying taxes on any profits that you get from properties that you've gained on is now going to be much, much lower, and it's going to be worse in 2024. Anyway, this is what I found out. I'll keep an eye on the situation to see if there's anything further that comes out in the coming weeks. Um, but that's what we know right now. There is going to be a mortgage bailout in 2023. Oh, and by the way, guys, today is Monday. Tomorrow, on Tuesday, where I normally post, there is going to be no video. Tomorrow is actually my birthday, and I'm going to have a pretty busy day anyway. I'm going to be filming for Steph Pack Lunch, and I'm not driving, I'll be on the train. So I want to take the evening off and just, I say chill, but I'm going to be working anyway on another project. But there'll be no video tomorrow evening. If you want to wish me a happy birthday, by all means, feel free to smash the like button on this video. And if you're new to the channel, consider subscribing. I appreciate you. Cheers.